Good evening to all of you. Welcome you to today's webinar. Today we are going to look at trend lines and Fibonacci ratios and show its illustrations in Nifty and Bank Nifty and also in stocks. We are continuing the discussion we had on Tuesday, and earlier webinars also we have highlighted the usage of trend lines and Fibonacci. Trend lines basically to identify the trend, that is whether it is a bullish trend or bearish trend, and also to make some predictions of resistance and support. Similarly, Fibonacci ratios are also used mainly to look at some important areas of support and resistance. So we will look at both this and see how a combination of trend lines and Fibonacci, or even one of them, would be very helpful for you to know the areas of resistance that will be there. So now we will go to the chart. We are using the investing.com chart here, and this is a monthly chart of Nifty. So trend lines, normally you can use connecting two important lows. Okay, that is, trend lines are used basically to connect two important lows or two important tops, and then we can draw a parallel line also to that particular trend line. So now we will just instead of explaining, we will look at the illustration itself straight away. Now let's look at the trend line. This is a monthly trend line. This is going to be quite a big this one line, which will be of great. See, the last two important tops we have connected. This is the top which is before the pandemic, and after that we saw quite a big fall. And right now the markets are corrected for the last 2 months now. So this is an important top as far as the Nifty is concerned. So based on this, we will just now look at this line and draw a parallel line and anchor it to some important lows. Like for example, so this is the important low before this. See, this was a low, right? So for a couple of months, this top was not taken. If you look at it, this top which was there on in February 2021, then March and April it was slightly down. It was slightly down. So what we are doing is that we are anchoring this particular parallel trend line here. So if we make it thick, extend left and extend right, and look at this. So here this is an important area of support. So we will know that this area of support should not be broken. So that means 16,411 we consider that just to be an important bottom. So it is also, as the day before yesterday on Tuesday, we were explaining with the 200-day moving average and also the Fibonacci ratio. So that time we said that the 200-day moving average is coming closer to 16,250 or so, and we should not be too fussy about that whether it should exactly come to 16,250. It can be something above or below. So now it looks as if the 16,411, which is the bottom now, has come because based on the trend line. Earlier we had explained with the help of ratios, that is, this fall is around 14% from the top. I think this is 18,600 to 16,400 is something like 2,200 points, and 2,200 points divided by 18,600 represents only 12%. So approximately a 12% fall has already taken place. So good chance that probably the correction could have gone over, because not many times we get such corrections which is beyond 10 to 12%. So this correction seems to have happened, and there is a good amount of support based on the trend line. Okay. Now suppose if this breaches, what we should do is how we should make a projection. Now here let's look at this place. After that we should move it to the next important low. So this is the place. So suppose if that is broken, chances that it could go right up to this low, which comes closer to the 15,550 levels, 15,500 levels. So if this low is broken, there's a good chance that it could be 15,500. Any break of 16,400, of course there are some interim support based on the Fibonacci, it's coming to 16,600 or 16,000 or so, but based on the trend line, it looks as if the 15,400 is a possibility, or we can even place it above this top. Let's take. Sorry. So this top is another important top. So this is coming next, coming closer to the 15,900 to 16,000, right? So the trend line which is based or pivoted on this particular bar, top bar, also keeps the 15,900, and probably then goes to 15,500. So based on the trend line, we expect that the support should hold at 16,400. Excuse me. Then after that it should be 16,000. Then it should be 15,500. So these are the important levels of support based on the trend lines. Now let's look at whether it has breached that certain important trend lines, so that the resistance can also be seen. So now, see this particular top, now this should not have been broken. Now that having been broken, if you look at it, so next step in when the rally takes place, we should get resistance closer to this line. So anytime the price approaches this particular line, there will be a resistance and it can get pushed lower. So you can keep this line always in the back of your mind. So any rally, whenever it takes place, should get closer to this particular level. That means if you look at it, the projections, if you have to do for 12 months, excuse me, it should be 19,650, 19,000, 20,000. So somewhere around these particular levels. If you keep it on month, so this is January, this is February, this is March, this is April, so May, June. So maybe for June around that 19,700. So if we can make a projection based on this particular line of this trend line, which is basically the line which connects these two top, and that particular line, when anchored at this level, it can become a resistance. Now this is giving the support. If you look at it, this area, see, this is the area of support. This is the area of support. Now you can see this top, this bottoms, and this bottom. All these are holding up, right? So we should accept this. AC off. So we should accept this particular line and probably look towards buying on dips, keeping 16,400 as a stop loss. So this is based on the trend line. Now the same thing, Fibonacci, if you look at it, so this is the Fibonacci line, right? This is the Fibonacci drawn from the bottom of the pandemic. That is the bottom which was seen in the market in March 2020 figure, which is around the 7,500 levels, at the present top 2 months back. Now if we draw the Fibonacci there, the first resistance, the support that comes is the 23.5% retracement, comes closer to 16,000 levels. So that's what we have seen, that if this broke at 16,400, we have a trendline support and a Fibonacci support coming at 16,000, and that will be a very important level of support, next level of important support. So based on trendline as well as based on the Fibonacci, we have this particular level of supports coming there as far as the overall market structure is concerned. So Nifty, we should now be prepared for a possible support, a bottoming out itself at 16,400. If things worsen, the chances that it could be 16,000. Now we will also look at the trend line and Fibonacci from the top to the bottom. See, now we will look at a weekly chart there, and we will remove this trend line. So now this is the weekly chart. Okay. So let's look at the when the trend line, when the bearish trend which is taking place in the last 2 months will get broken. Now let's draw this line. Okay. So this is the trend line which needs to be broken. So this week has been particularly a good week. We see this particular week it's closed at 17,003 and above this bottom which is 16,782. So next week we expect that if there is a dip, the dip to get supported close to 16,780 or 750 levels. So the first projection that we can make for the next week is a support which is coming at 16,780 based on the weekly pivot. Now the this one, that is the resistance, is coming closer to the trend line, which is this line has to be broken next week, which is around the 17,700 levels. Okay, and this top is also 17,640. So if it doesn't happen next week, then we should probably see the week after the trend line is coming closer to 17,560. So this trend line has to be broken for the bullish trend to get reinstated again. So those who are following the trend based pattern should look at some break which is above 17,550 to 17,650 in coming weeks. Now similarly, the support, if you look at it, this is the same parallel line which we have drawn, and if you look at it, this is the line. Okay, now this line was broken, right? So this is the trend line, and we have kept this particular line parallel line. We have drawn a parallel line to this trend line from the top. Now this line has now been broken, which means this trend line has been broken, which means this should offer some support right now. If there is a fall, you can just see 16,720 next week, and that is what we said, this low of 16,780. So next week, based on the trend line, we should have a support which is coming closer to 16,700 or so. Now the same line, when it was projected with this bottom, see, sorry, see now this week, you can see these two lines now, these two pivots touching this particular trend line, which means this is going to be a very strong support. If 16,780 is broken, 720 is broken, then we should see the bottoming out taking place very close to 16,400, 16,365, 370 levels it should happen. So very closer to 16,400 we should see strong support, and right now it looks to be a 17,500 to 600 has to be broken as per the trend line. Now we can also do the Fibonacci here for this. So from the top to bottom, so the 23.5% came at 16,900. That is where there was a lot of resistance, right? So 16,900 was the first resistance, and we have drawn it up to 16,000. This is 410 or so. So there has been 500 points it had to climb. So it's been able to get above those 500 points on the top side, which means that if there is going to be a fall, first of all, then in that case 17,151 has come, minus 500, which is to be minus 500, 16,650. So what we are just looking at is this based on the Fibonacci. Now since it has gone up to 17,150 levels, it should now, and having broken the 23.6% retracement, 16,905, we should expect a strong support whenever it comes, basically at 16,650. If there is no further rally above 17,150, we should see 16,650 holding. If it is going to rally a little bit further, then that support should come closer to 16,700. Now that is based on, because this is 23.6%. If you look at 16,410 and 16,905, which is approximately a 500 points. So the first 500 points having been broken, if to that extent, whenever the market falls, the retracement should hold that particular level. So that means since it is already gone to 17,150, and this difference of 23.5% to the bottom from where the Fibonacci has been drawn, being 500 points, we should have the dip contained at 500 points from the top. Now this top till now is 17,150. So 17,150 minus 500, 16,650. If by chance the market goes to 17,200 or so, in that case we should see 16,700 or so being the support. So right now we are looking at very strong supports coming based around the 16,700, 750 levels. So we should be careful and look towards going long as and when you see some bottom taking place around the 16,720, 730 levels. So right now let's project 16,700 to or the first support, and that break has to take place if it is to go down to 16,400 to 16,350. And the Fibonacci right now we have already said, based on the trend line, it's coming closer to 17,500 to 600, and the 38.2% retracement comes at closer 17,234, the first one, and then comes 50% retracement comes to 17,500. So the next level of resistance that we are expecting now, as far as Nifty is concerned, is 17,235. then of course we can have the rally to 17,500. So based on these projections, we expect that support to come closer to 16,700, 750 levels, and resistance, next level of resistance to come to 17,250, then 17,500, and eventually a final break of this based on the trend line and Fibonacci. We should have, and also based on the moving averages which we have seen earlier, this bullish trend will get reinstated, and then we can see a much greater rally to take place. But whenever the rally takes place, we should also be mindful as to where all the resistors can come. And let's look at the pivot points itself and also the Fibonacci. Now, the first area, this will be broken because 16,000 on 500, 600 levels. Then we will have a strong resistance coming closer to this area, which is 18,100. So the next level of resistance above 17,500, 600 levels will come closer to 18,100, and then of course the weekly close, which is will be 18,400 to 500 levels. So these are the levels, but eventually any pullback also because the bullish trend has been reinstated. So any move above that will only be a pullback, and the pullback could be contained maybe with 3.5%, 4% fall, or at the maximum of 5%. Normally, getting even 5% lower is not that easy. So generally speaking, we should have supports coming even at something like 2.83% levels itself if there is going to be a fall. So expect now with this candlestick, which is like a squat bar, because it opened lower, went lower, and then has rallied to close in a bright note. So and also it has broken this particular low, so that means that also offers a comfort. Then it is still to break this downward trend line, so we need some sort of confirmation before we can say the bullish trend is reinstated. And the first Fibonacci resistance for the from top to bottom, 18,600 to 16,400, the first Fibonacci ratio, that is 23.5%, which came at 16,905, has been broken. So we should expect supports to come first 16,905, then 16,700 levels. So these are the two levels which we should mark for this. So let's look at the day chart also today. So today you see 16,911, then it rallied to 17,003. So that was the first Fibonacci, because that was the Fibonacci level that was broken, right? So we are aware that the first Fibonacci level that was broken was 16,905. So since it has pushed itself above this, we should expect this level to get support. So in case if it starts to go above 17,235, 240, then it has to again break below 16,900 for it to change its course. So because one level of Fibonacci being broken, then the next level of Fibonacci becomes a support. Eventually it becomes a support. So this has to be broken. Now we will also look at the bigger time frame to understand certain important areas of resistances from the Nifty chart. Now this one, which is this is an important low, and let's look at the Fibonacci for from this level to this top. So if you see, it has come down to this level, right? So it had come down to 16,345, 350, 16,410. So the 38.2% retracement was 16,885. So now the 16,885, 16,900 has been broken, which means very clearly we are seeing as if some sort of a bottom has already taken place. Some sort of a, because as you said, that one level of Fibonacci, if it is broken, that itself becomes a resistance. Now that resistance has been broken, 16,885 to 16,900 level has been broken, which itself now gives a comfort for the position to move towards the 17,555 or so, which is the 23.6% retracement. So we are looking at this place. Then we also look at some other area of Fibonacci. So let's say from this particular low. Luckily, there was some sort of breach of this 23.5% retracement from this bottom, but eventually now it has started to go up, which means this itself can be a support again, because this Fibonacci level was offering a support. Now that being broken, it came down lower, but now that is again getting broken on the upside, which means this particular level, which is 16,780, is the next level of support, which is what we are talking about. So 16,905, then 16,780 to 750 is a support, then 17,250 is a resistance, 17,550 to 600 levels is the area of resistance. So please keep a watch on this situation. But overall, market having corrected by around closer to 12%, it looks ripe for a uptrend again. So I think the market will be soon shaking off all this Omicron fears and will start rallying. Okay. So this is as far as the Nifty is concerned. We will look at Bank Nifty. So Bank Nifty, we'll look at the monthly chart. Bank Nifty, the fall is slightly worse than Nifty, and we'll look at the Fibonacci straight away. So this breached the 23.5% retracement. So there is a chance that it can come to 38.2% retracement, which is closer to 32,000. So this is one level you keep in mind as far as Fibonacci is concerned. Now let's draw it from this level. Where does it stand? Now here the 61.8% retracement itself was broken. That means 34,650 was broken, which means right now we are looking at this level as a resistance area. This is 36,050. So any rally right now, we should have a strong resistance closer to 36,050 first. So from 34,857 where it closed, we should expect a strong resistance coming closer to 36,040. 36,040 can be a very important level, and once it is broken, probably we could expect the rally to take place further. So this is one level of this one, and if it starts breaking again below this particular low, then we should expect to drop down first to 32,677, which is a 78.5% retracement. That is coming closer to 32,680 levels or so. Possibility exists for a move down to 32,680, but if it starts to break about 36,040, we should be waiting for this particular bearish situation to be over and a new bullish situation can develop. Now we will look at the trend line support and resistance. We will say similar to what we have seen in previous Nifty charts. We can also look at the trend line. Either we can draw from this top to this top and make a projection, or we can draw a trend line from this top to this top and look at a projection. So we will look at the bigger ones, which is this, let's say, and almost most of they are touching each other, right? So there's a slightly small difference only is there. So now we will look at the trend line support for this. So this is a good line of support right now. So Bank Nifty looks to have taken some sort of support based on this particular trend line, which is a parallel line, and that parallel line is for a line which connected this top with that top. So that is going to be a very important level, and once it breaks only, then we will know that probably it can go down to this level of support, then it can come to this level, then it can come to this level, then it can come to this level. Now, so that's all quite far off. So now if it is going to have some resistance, it may come, if we have to put a trend line and anchor this here. See, let's say we are anchoring it here. So or probably yes. So this area. So whenever there is going to be a support, this one resistance, it will come here. Now let's look at these levels. So next one, 38,360. Then after that, it could be 38,940. So everywhere, we will have a resistance closer to this line. So don't get surprised whenever the market goes up. Bank Nifty can have some sort of an up and down movement before it starts to really get over that situation and starts to rally. Now this can be seen from the earlier trend lines support resistance also to confirm what we are saying. See, in previous thing, if you drawn, okay, so there was slight exceeding of that. Now if you look at it, so the same parallel line was drawn and it found support here, right? It found support here. Now which are the levels that probably can once this line was taken, then in that case this particular levels, if you look at it, see the one was this, right? So it should have held on to this level. Now once that is broken, now this particular trend line should have held, but since the market rallied very significantly above that, then this itself become an area where there was some support, some amount of a support. Then in that case we have resistance coming at this place. When you keep it at this pivot point, this became a resistance area. Now after that, of course, we have this particular area moved up, right? So the trend lines are very, very effective in projecting where all the resistance and supports can come. So if the Bank Nifty has to look very bullish, then in that case we need to see a good amount of break above this particular line. It should happen above this line. Okay, so this line has to be broken, and Bank Nifty has to stand above this line to confirm that we are in for a bigger this one, that is a rally. Okay, so this is as far as the Bank Nifty is concerned, and let's look at the smaller time frame charts here. So right now we are also confirming possibility that it could have bottomed out. It could have bottomed out here. So this is not a great week as far as Bank Nifty is concerned, unlike Nifty, which showed a little more positivity, but eventually probably there's a good chance that it can turn around also. So on in a daily chart, we are looking at the Fibonacci here. So it has to break the first 23.5% retracement, and that is coming closer to 35,810. So first of all, it has to break 35,810, then probably even rally closer to the 36,950 levels. So it has to break these two levels. That is, one is that 35,810, which is the 23.5%, 23.6% retracement from the top May till now to this week bottom. So if that happens, the first resistance can come closer to 35,810, and 35,000 after about 35,810. We will have a resistance coming closer to the 36,950 or 36,900 or so. So based on this Fibonacci, we need a close which is above 36,950 or 37,000 to confirm possibility that probably we could be heading higher. So the 38.2% retracement is going to be very important to confirm that eventually a bottom has taken place. So normally Fibonacci traders use an important 38.2% retracement for confirmation that this particular trend is getting over. So this is as far as from the bigger chart picture is concerned. Now you can use whatever way that you want as far as the trading is concerned. That depends on each one's comfort of how much of stop loss they want to keep and all. If you look at even from this top to bottom, so that we can look at from the daily chart figure. So this is one low, and this is one high, and this is one bottom. So you can look at the Fibonacci from this level to this level also. So now you can, for this particular top to bottom, the 38.2% was touched yesterday, and then it started to fall. So once it touched the 38.2% retracement, you can comfortably know that if there is going to be a collapse below this particular low, then importantly this itself can be an important top. That is one confirmation. Second thing is, you have to watch for this 34,834, whether there could be a support closer to 34,834. So let's look at whether 34,834 provided any particular support. So this is the hourly chart, 35,050, and then it just broke. There was not much of a support at 34,834, and eventually it broke, and then once it started to rally, it came back to 35,072. So 34,834 was not a very critical area. Though we have drawn the Fibonacci of 23.6%, this shows very clearly that this is not a very, very important area for this. But as I said, that suppose this is this low is 34,018, and the 23.6% is 34,834, which means 834 points is approximately, or 800 points is where the first level can probably come. So 35,477 minus 850 levels, 34,627. 34,627 is the first important support. It came to 34,585, very closer to that. Okay, slightly penetrated that. So this is the since this is 23.5% difference from the bottom is around 835 points or 850 points. So eventually it has to, since it has crossed this 23.5%. Now when you look at the trend again to get over, we should be looking at this trend from 35,477 minus 800 points. So that will give you a correct trend analysis to know that whether we have completed the process of trend move up to this, or probably it is going to continue a little more. Right now it looks as if there is a chance that since it pulled back from 34,585 back to 34,857, it can continue, it can have a slightly on the upside. So how do we confirm from this from the bar chart? We have already said that lower tops, lower bottoms, okay, and higher tops and higher bottoms. Now assuming that this day is good, this is the bottom and this is the bottom, how will you confirm this is the bottom? If this eye is going to be taken off. So now we have found that this particular area can be one support, can be one important support from the Fibonacci. Now how will you confirm that this is an estimate of confirmation from Fibonacci? Now how will you get confidence to trade on the upside? Now confidence to trade on the upside will come when this eye is broken, when this day high is broken, because that will confirm that this is a bottom and this is a higher bottom. So at least we have got higher tops, higher bottoms, higher tops, higher bottoms. Even if you have not got a higher top, at least we have got a higher bottom, which can confirm that probably there can be slightly on the up move. Now this is how it happened here. Just see this particular so this is a low and this is a low, right? So once it started to move above this, at least we have a confirmation that it has started to go up a little bit higher on the higher side. And once you have a lower top, which is the fall below this particular low, we could have exited this particular long at this particular level and we could have gone short. And that short can be removed once it starts to move above this. So this is how you normally look at the trading. Use a trend line, use a Fibonacci, and use your bar chart and dough theory to confirm that. The Fibonacci and trend lines will give you an estimate. Yes, this is likely to stop here. Okay. So, but in order to trade, you need a confirmation, and a confirmation which is at almost at the closer to the bottom. So the trend line and Fibonacci will give you a confirmation that it has bottomed out at this particular estimate. Now, how will you get a confirmation from that? Is from the bar chart. Now, if you look at this bar chart, once it starts to move above this particular day high where I am keeping this pointer, then in that case you will know that the higher bottoms are come and you can trade on the upside. You can trade on the upside. This is what we said in Nifty also that day. That is, if it starts to move above, say Nifty from the hourly chart, we said a couple of days back, see this is the bottom. Okay, we said that this is the bottom and this is the bottom. Okay, higher bottoms are coming. This is the bottom, this is the bottom. So higher bottoms are coming. We said you go long above the 16,803. If it is going to fall below this, we said probably we can see a lower tops. So we said go long above 16,803 and keep a stop loss below 16,690. This is what we said earlier. Now let's look at what we should do right now. See, we have of course this bottom and this is the bottom. Okay, lower bottoms have come. So lower tops will get confirmed once it starts moving below this particular hourly low. So once it starts to move below this low, this is 16,983. So if there is going to be a fall which is below 16,983, okay, this was the last hour of trading. It went up to 17,666 and then fell back to 16,983. So if it starts to move below 16,983, then you will have a confirmation in the hourly chart that this is going to move on the downside. So you can sell below 16,983 and keep 17,066 as a stop loss, which means only a difference of 83 points, which is around 0.5%. So you are taking a risk only for 0.5%, and whatever trade that you did here, that is above the 16,000, probably you would have entered the trade somewhere here. 16,824, 825, and you can get it out here at 16,983. So you would have made some profits, and wait for it to come down, and then before you push yourself on the higher side. So those who are looking to trade should probably use the hourly chart and look at the estimate of the Fibonacci for that particular day or whatever it is, and then look at the trend line. Keep those things ready, and then look at the bar chart and confirm that with the bar chart. Now we will look at this same illustration in some stocks also. Now let's look at the stocks which are doing well. Let's look at TCS, which is doing well now. Now we have this is hourly chart. We look at the daily chart. See, the daily chart, ever since the consolidation started to take place, now we are getting higher. Generally, this is an important bottom, and this is a bottom, right? So this bottom is holding up. Okay. Now, so here, if you go look at this, this is this one is the break above this. Will confirm that this is a bottom and this is a bottom. Okay, and higher bottoms are coming. So anything above 35.98, we could have even gone long, keeping this particular low as a stop loss. Keeping this particular low as a stop loss. Eventually, if at all you feel there is a you are a trader, then in that case you are getting something like this. There is a lot of whipsaws here. So this is a lower top compared to this top. This is lower top. So you might have made an exit. But since in a daily chart you got a lot of this particular choppiness of action, there is a chance that probably you would have been in and out, in and out, in and out a couple of times. So this is the problem as far as trading is concerned, that sometimes when you follow a particular system, in some cases it can get you into this sort of choppy action. Suppose if you want to avoid this, then you may have to go for a weekly chart. And the weekly chart probably you will have a little more clarity as far as stocks are concerned. And this particular stock, if you look at it from the weekly point of view, this is a brilliant move as far as TCS is concerned. And so here you have a bottom, and this is another bottom, right? So in this bottom, what you should do is that you should look towards break about 35.15, and the moment it started to come above 35.15, you continue to maintain on the long side. You continue to maintain on the long side. So now TCS is clearly on the long side with since it has broken above 35.15. And look at the monthly chart also as far as TCS is concerned, and it has started to, so this was the bottom, and this can be confirmed as a bottom because we have got to move above this particular high. So in both monthly chart and weekly chart, TCS looks good, and probably for charts we also need to look at the weekly chart for investment purposes, because a lot of stocks can have a very choppy action as far as daily charts are concerned. So TCS is clearly on the up move, and let's look at some of the stocks like Icici. So Icici, this is a weekly chart. So the weekly chart probably still not great as far as the weekly chart is concerned. We need more confirmation because this is a lower top compared to this, and it has come down a little lower. So we need definitely much confirmation pattern of either a higher bottom and higher top. So here we don't have that in the daily in a weekly chart. On a daily chart, one thing is you can say is that this time this particular break above this, if you want to take a chance and make yourself very closer to the bottom, then if this top is going to be broken, that is 733, then probably we will have a bottom here, and this is a lower bottom, right? If 733 is broken, so 734, so anybody who is looking towards on the long side can look towards 734 being broken on the upside as far as Icici is concerned. You can be on the long side. So 734 is going to be a very important level of resistance, and if that is going to be broken, then we should see the rally taking place further, because this is the last important close after which it started to fall, which is 733. So any close above 733 or 734 itself mean that probably we are heading towards the higher side as far as Icici is concerned. So you don't need to wait for a confirmation from the weekly chart. Probably you want to get yourself on board at the earliest, then you can go at the daily chart itself, Icici, buy above 734. So this is Icici is concerned, and if you look at the bigger chart time frame, and here probably let's look at whether same thing, like we'll draw the trend line based on this important top to bottom. So this is working, right? So this place seems to be this trend line here at this bottom, anchoring at this bottom, and this bottom seems to be working. So right now, if it starts to move up, then probably you keep it on this particular top. See, this month also it went up, and after it fell, you can just see this one, and see this was the resistance. So 769 was the resistance. So now if it moves next month, this is monthly chart. So I think probably in December or in January, we have expect the first resistance to come closer to 775. So it has to break 775 and stand before we can confirm that there is a good possibility of a further upside. Otherwise, it could be slightly on the up and down movement can take place. So anything above 733, if you buy, look at some sort of a resistance close to 775. So if there is some resistance coming closer to 775, you make an exit, wait for it to come down a little lower before you go on the long side. So that is how we use the trend line to make some projections there. Now let's look at some other scripts. Probably we look at Reliance. So this is the monthly chart, and probably you can draw the trend line from this top probably to this top, and then look at the areas of support and resistance. See, this is area. Okay, this should have. So we are yet to see any. Okay. So this place is holding right now. So we need, if it falls down, then probably we could expect a good amount of support here at these levels, right? Because many times it has touched and gone from this particular level. So anything which is very closer to the 2170, 2180 next month can be a very important support, but probably it might have even taken support right now. So let's look at the Fibonacci for this. Probably we'll look at the Fibonacci from this low to this top. So 61.8% has come, which is 2283. So any further fall should hold on about 2154, 2150 as from the Fibonacci chart is concerned. Since it has come up below 2283, there's a chance that it could have some resistance close to 2373. So the first area of resistance that could come as far as Reliance is concerned is 2373. Okay. So now we will look at the other type of Fibonacci, whether any other type of Fibonacci that has been cut, some important ratios, probably from this level, from the cluster. So not much here, so we can leave it there. It has come to 23.5% and is taking support. Look at the from this level. Okay. Now here. Here also the 2290 was cut, so probably the resistance can come closer to 2402. So we have got a lot of resistance closer to 2380 to 2402. Right now it closed at 2372. So we have to see how it behaves closer to 2402. So if it starts to move about 2402, I think we should expect Reliance to start its uptrend. And here the weekly chart also, if you look at it, this is also a good week, and probably there is what we call as a squat bar formation, and this should mean that probably this particular low, which is the 2310, should offer strong support as far as Reliance is concerned. And the last important high for Reliance has been this close, which is 2458. So based on the Fibonacci here, this is the 38.2% retracement. is coming closer to 2435, 2436. So we should look towards 2400 to 2435. I think 2435, 2400 eventually should be broken for us to get a control. So based on these type of three types of Fibonacci analysis from various pivots, the highest level that we are getting is around 2435. So let's look at whether this 2435 is broken, and if 2435 is broken, then we should be looking comfortably towards higher levels. So that's how we use the trend lines and the Fibonacci, and we have shown you some illustrations. And more or less, we should confirm this with the bar chart patterns. And let us say look Reliance from the daily chart point of view. And from the daily chart point of view, there is no clear formation of higher tops and higher bottom. So we need more confirmation as far as the chart pattern is concerned, as far as Reliance is concerned. We had a clear formation as far as Icici is concerned. We have also looked at the Nifty from the hourly perspective of what we should do. So please use the Fibonacci trend line and the bar chart to get yourself a confirmation of where to go long. So these are some illustrations which we have shown, and we have also highlighted what are the areas of resistance for Nifty and Bank Nifty, which we can use it for your investment purposes. So thanks very much, and if you have any questions, please ask. Thank you. So happy Christmas, and hope again to be a good new year. And this year has had some ups and downs. Hope that next year 2022 will bring a lot of joy and cheer. Thank you very much. Good night.